Hey everyone, Chris Urso here with URS Capital Partners, or URS Capital Partners. I want to talk to you a little bit about what is a value add and what do we look for in a value add opportunity. So first and foremost, all we do at URS Capital Partners are acquire properties that have a quantifiable value add component. And there's two main ways. It's either going to be physical or operational. So we look for issues in either one of these areas on properties. So we're not the type of buyers that are going to be presenting you with opportunities to invest in the prettiest, newest, cleanest properties. We're looking for the properties. If you look around in the office, these are all properties that before they look nice and were photogenic, had major issues attached to them. So some of the things that we look for that we can enhance is first and foremost curb appeal, signage on the property, landscaping, parking lots, exterior paint, re-siding of buildings, common areas, and curing any deferred maintenance issues. So fixing things that are broken. More often than not, a lot of properties that we buy maybe were built in the 70s or 80s and they haven't gone through any upgrades or updates over time, but they're really well located within their target markets and they can sustain an upgrade. So obviously everything starts with location in this business, and we'll talk about that on a separate tip. But to stay focused on the value add side, I'm going to just touch mainly on the physical components for this tip, not so much the operational. So we're looking at ways to say, okay, if we come in and cure things like siding and landscaping and rebrand a property, bring in all professional signage, change the image and brand of this property, can we elevate the property in some way, shape, or form? Elevate our tenant profile, elevate occupancy, elevate our rents. So think about it that way. Elevate the property, tenant profile, rents, and occupancy. You know, that's really our goal in all the efforts that we put forth. So in terms of a big thing in today's market is amenities. So we'll look at the amenity package and say, okay, the neighborhood is maybe here, our property sits here. How do we get our property to catch up to our neighborhood and our tenant profile? And a big part of that is the amenities in today's space. So we're kind of creating a little niche for ourselves in going into these 70s and 80s properties and doing outdoor kitchens in our southeast markets and even in Midwest as a separator, as a value add component to give our tenants an amenity that's unique to the submarket for this type of product that we're buying. So we'll come in, we'll put in outdoor kitchens, picnic areas, even in our C-class properties, depending on the class of the property, will dictate the level of finish. So in our B properties, we might be blowing it out with two awesome stone built-in gas grills, a fire pit, some built-in seating, you know, umbrellas, bar tables. In our C class, it might be as simple as creating a pergola and putting in a grill and a picnic table to give our tenants a gathering space, a place to kind of feel like a community. Pool areas is a big one. I mean, I love looking at, you know, deals that are well located where you have pool area with furniture that was bought back in the 70s when the property was built and never updated. These are little things to change the look and feel of the property. Fitness centers are big. Can we go in and redefine the space? You know, modernize it, bring new equipment in. You know, in today's world, the younger generation and even the baby boomers, they're not into the big universal equipment and all that stuff. You want good cardio equipment. You want barbells, you want yoga mats, you want bands and things like that. So we'll look to repaint or reskin fitness areas, our clubhouses and leasing offices. That's the main entry point that people walk into, both our existing residents and our prospects. So can we go in and change the furniture out, change the flooring, modernize it, redesign the space? We do that a lot across all of our properties and create gathering spaces. So can we create a club room and put a big 60-inch TV in there and a kitchen and a table and maybe a game space for people to rent this out to either watch sports games or have birthday parties, have showers, you know, whatever the case may be for our residents. Playground areas, if we're in a really family-friendly community, you know, we'll look to define these areas. Dog parks are really big in today's market now. People are big on their pets. We've been putting little dog parks in. You know, just putting a nice fenced-in space, a couple of poop stations, maybe a little activity pieces for the pets to kind of jump around on, you know, and some seating for our residents. And we're seeing really good responses for that. And some of you might be saying, well, how does that create value for the property. And a lot of these things on the exterior and the amenities are not direct dollar for dollar results of how much I'm going to increase the rent. But what it does is it's a trickle-down effect. Obviously, it's going to allow me to elevate my rents and be more competitive with the nicer properties in the market. However, it's going to bring in a better quality resident, which is going to in turn hopefully stay longer because we have good amenities, which is going to reduce my delinquency and increase my occupancy. So it's really a trickle-down effect by adding these amenities and bringing the curb appeal to a property. And then on the interior renovations, once we've satisfied the outside, we always hit our properties outside in. It's a big mistake many new investors make, is they buy a rundown property and say, okay, I want to start renovating apartments so I can get them filled, and then I'll start to do the landscaping, then I'll do the siding, then I'll redo the parking lot, then I'll do the signage after I get all my units filled. But they don't realize that you're not going to fill those units if you don't have the picture from the outside complete first. So we come in with really a shock and awe effect in the first 6 months of takeover on our heavy value add deals, where we hit that outside of the property very aggressively, very quickly, to make that splash in the market and let people know there's new ownership. It's not the same type of property, new management, and it shows our current residents that we're investing in the property. And then simultaneously we'll start doing the interiors, depending on what the business plan is for the property. You know, for our big repositions, it could be everything inside the unit. So flooring, paint, countertops, backsplashes, appliances, all new modern lighting package, new bath vanities, refacing the cabinets, putting new hardware on. Some of our C-class properties, it's just going in and making the units clean and functional for the demographics that we're going after. So it's a simultaneous approach on the value adds, and then that's how you ultimately increase rent and increase occupancy and create value on your property. So I look forward to working with you and getting you involved in value add project in the future. Thanks so much.